Doug, there's so much ground I want to cover with you. I was excited to talk to you about this trend that we're seeing of countries kind of moving towards their own gold trading platforms. China kind of kicked off the wave with the Shanghai Gold Exchange. Then we saw Russia, Brazil, and now the UAE wanting to launch their own platform. What is this signaling to us?
Well, I think it's interesting. It's very important. I think just as an observation, yesterday at the conference, somebody made the point, gold is too expensive at $1,500 an ounce. And a counterpoint was made, and I think a real valid one, which kind of supports your observation, is that gold is really not a price-sensitive instrument. It's a monetary instrument. It's a precious metal, monetary metal, that really acts as a means of exchange. And as a money, it is functioning in that regard. It's a form of exchange. It's a form of value preservation, as well as a means of payment. So I think that countries are establishing their own exchange to value gold is a very important thing. And I think in particular, if you look at gold as a means of exchange to other currencies,
right,
and you look at the price of gold numerically in other currencies, it may seem high, but it really says a lot about the currency. The currency is cheap, and it takes a lot of the currency numerically to buy gold now, even in dollars.
And that's a really important point, because what I also saw signaling is that there's almost a break from US dollar based pricing of gold.
Right.
That we might be, could we possibly be moving away from that?
I think that's what many countries in the world would like to see.
Right.
Get away from the US dollar valuation of their commodity.
I really want to get your thoughts now on the money flowing into, or perhaps lack of money flowing into mining here. With the uptick in gold, has this helped mining attract fresh investors?
Well, I think investors are very reluctant here to participate in the mining space. I think equity investors are selective. They're looking for companies that have quality assets and good cash flow and consistent performance. There is capital available. It's really from the debt market, and it's rather expensive. And the debt market is more willing to take on the risk because of the collateral they might require from a company that they're providing capital to. So equity investors are still very risk adverse, and perhaps we need to see a higher gold price to get the equity investor involved.
So would you say money is dead right now in the sector?
I would say it's very reluctant. It's dead. It's very tight for the equity
what do you think
component.
Is the issue, Doug? What would it take to kind of revitalize things here?
Well, I think a higher gold price, even though we've had a good move.
Yeah.
I think, clearly investors don't feel that the risk is mitigated by a higher gold price yet. So I think perhaps we need to get to 2,000 before the equity investor.
So they want to see the highs we saw in 2011. They want 1,900
They
back.
want a confirmation.
Okay, interesting. Really interesting.
Absolutely. There's that need for confirmation.
A lot of news items happening this week. It seems like we have a resolution here on Brexit.
Yeah.
You were saying you were surprised that didn't help gold here.
Well, when that evolved 3 years ago, gold had a big move.
Big time.
And I thought, through the past couple of years that I think the markets were kind of factoring in, this dislocation. And, perhaps this summer, the rise in the gold price is already reflecting the Brexit outcome. So, as much as gold prices have risen, I don't think that the market's really fully appreciating that. I think that currency values are down around the world. You have the cost of production actually going up for the steel tariffs that the U.S. is imposing. Prices of commodities are higher in the world, so labor costs are higher. So the gold price at this level is justified.
Let me just ask you this, Doug, from your perspective, over at Tocqueville, I know all the miners want to get your attention.
Right.
They'd love to have time from you and sit down with you. So the miners that do stick out for you, what do you look for? What's attractive to you?
Well, I think it's a number of things. It's not just one component. It's a number of elements. I think a company has to have a good strategy. They have to have quality assets. They have to have a vision for what they want to do with those assets. Perhaps they have to have the opportunity in front of them to create more value, whether it's exploration or through optimization of their projects. And an important element here is where do they expect to be in the longer term, and how are they going to finance that, and what should investors also expect from their efforts. And I think that's an important message for mining companies to think about. It's not just today, but where are they going to take the company in the future?
And that's good advice also for investors to follow, right? Kind of the criteria you follow. So also when you're looking at a miner to invest in, shouldn't this kind of be the same checklist?
Well, I think absolutely. When we look at a company, we're looking for why the market's valuing that company the way it is, what's in the value of the stock, what's not in the value of the stock. And then as we project where that stock could be, we note a number of different elements to get to that valuation. Once it gets to that valuation, then we recheck our position and say, well, have they achieved what they wanted? Did they do more? Did they do less? Does it make sense where they are and where they can be beyond that? So
fantastic. Wise words, Doug Groh. Thank you
Great.
so much for
Thank
joining
you.
us.
Good to be with you.
Thanks for watching. We'll have much more for you on Kitco.com.